Good evening, everyone. Today, we are going to talk about accruals and prepayment. This is one of the very important and very tricky area for level 3 advanced bookkeeping. I have received a lot of email from the student and they always have inquiry about the accruals and the prepayment. And this area is quite tricky because this is basically the main topic we're going to learn from Advanced Bookkeeping Level 3 AAT course. The main issue happen here when the year is end, we have to do some year-ending adjustment. And on the year-ending adjustments, we need to see is there any accruals or prepayment that we have to adjust manually. Now, obviously, as soon as the financial statement is ready and before we submit to HMRC, so what we do, we need to check every single expense we have claimed for that particular year. There is the accruals that is also considered and the prepayment also adjusted. So sometimes you heard this word that is called year-end adjustment, year ending adjustment. Year ending adjustment basically says how to adjust the accruals and the prepayment into the financial statement. So today we're going to speak a little bit, explain about the accruals and prepayment and how actually we can do the year ending adjustment. This is chapter number 6 on advanced bookkeeping book for your AAT course level 3. So let's start with the accruals. The accruals, ACCRUALS, accruals. The accruals basically have two sections. One is for expenses, so accrual expenses. The next one is accrual income. So one is expenses and one is income. So the first one is expense, the next one is income. Now, of course, this income and expense both are relevant to accruals. So accrual expense happened when the business already used the services, but they didn't make the payment. For example, think about the electricity or uh, any type of expenses. For example, rent. So, for example, I use the services for the month of January. Let's say for the month of January, I have used the services, but I did make payment on February. So basically, what's happening here? Expense already incurred in January, but I did not make the payment until February. So, for example, if you have a year, let's say we talk about 2019, financial year 2019, and year start from January and year is ending on December. Now we have some expenses here. Let's say for the month of December, month number 12, we use the electricity and we receive the bills or maybe the invoice on December, end of the December, or maybe next month, January, but we make the payment next year, that is maybe February. So year 2019 is finished in December and this is 2020. So for this year 2019, the payment we are making 2020. Even though the payment is making 2020, but this expense, let's say £500, this expense actually relevant to 2019, even though we are paying this expense next year, because sometimes some of the expense we don't know until the year is end. So when the year is end, or for example when the month is end, we see our electricity and gas bill and we paid to the next month. So obviously next month is the next year. So from the bank, if we check the bank will say he just paid all the money up to here, up to December. So the money he paid on 2020, that will not show for the financial year 2019. So what will happen? Let's say from January to December, the company paid £2,000 for electricity. Now what will happen? In December, there is a bill, and the bill is paid on January that next year. So obviously this bill also has to be considered for this year. Let's say that is £500. So actually the electricity expense, that is 2,500 for financial year 2019, even though on financial year 2019 we paid only £2,000 from the bank. Even though we didn't make the payment for 500, but this 500 is still relevant for this particular period. The reason is, this is called, I'm sure all of you know that, accrual concept. According to the accrual concept, or according to the matching concept, the income and expense has to be matched against that particular year. Now, obviously, if this income or expense relevant to 2019 doesn't matter we paid, that is 2019, or doesn't matter we received 2019, if the income or expense relevant to this year, we have to include on this year. So basically, this is the accrual expense. What happened because of the accrual expense? Because of the accrual expense, our expense increase expenses increase and the liabilities increase. Expense increase and liability increase. So expense basically increase. The reason is that expense relevant to this year, even though you didn't make the payment, so expense has to be increased the way we increase 500. And on the other hand, this 500 we didn't make the payment for the financial year 2019, even though we make the payment next year. But for this year, it is our liability, and we have to pay this money to the next year. So up to December, this is my liability because we didn't make the payment this year that relevant to this year. So basically, the expense was relevant to 2019, but we didn't make the payment on 2019, so that's my liability. So this is accrual expense. Now let's have a look one of the accrual expense example, and obviously we need to know how actually we do when we actually record on the accounting system, because this expense will not be expense for the next year. For example, this is 2019, this is 2020. So let's say we have a year January to December, and in this year, let's say during the year I paid 2000 and 500 was due here, relevant to this year, but I paid in 2020. So I paid this 500 here in January. And of course, I bring this 500 here for 2019 expense, but my bank will say £500 gone from the bank in 2020. Is this 500 actually paid here, even though 500 was relevant to that expense? So bank said I paid £500 on 2020, not 2019. So obviously, in here we said our electricity expense is 2000 plus 500 is accruals. The total expense 2500. So this 500 I already considered for 2019 year. So when I'm going to do 2020 financial year, so this 500, whatever is paid from the bank in 2020, I'm going to minus from the total expense for 2020. For example, during the 2020, from the bank, we paid total, let's say £20,000. And from this 20,000, I have to take away this 500, because this 500 expense I already considered last year. So I'm not going to consider this one again. So I'm going to say for this year, my expense is 19,500, not 20,000. So that is basically the accrual, that is expenses. So let's have a look one of the example from the book and try to understand a little bit more in details. Let's move on one of the example from the book. Let's say we are here, activity 1. On activity 1, it says Fiona set up a business on 1st January 2007. Her cash payment in the year to 31st of December 2007 include, we have electricity. So this all amount we have here, we can see this amount is already paid, this amount is already paid, this amount is already paid, this amount is already paid. So all of this is paid from the bank. All of this is paid from the bank. So year is ending 31st December. Very, very important. We need to always consider when the year is ending. So 31st December year is ending means the year is start from January. So January till December is the year ending. And this all money was paid during the year. That was paid February. Let's say we paid here £96, then £120 we paid here, then 104 we paid here, then 145 we paid here. All this money paid before December. By November, all this money is paid. Now, on the bottom it says on 6th of March 2008, Fiona received an electricity bill for 168 for the quarter to 20th February 2008. That is next year, isn't it? So we are in 2007 and he talked about 2008, that is next year. So in here, 20th of February, Fiona received electricity bill £168. Even he didn't make the payment next year, but he did not receive any bill in 2007 for this quarter. So what happened? On 6th of March, Fiona received electricity bill 168. Now 6th of March, quarter 2, quarter means 3 months, isn't it? Quarter means 3 months. Now when I said quarter 2, that means 3 months, and quarter is ending 20th of February. So how many months is here? 3 months. So that is February, January, and December. Quarter 2, that means quarter ending on February. So you have 3 months, February, January, and December. Now the question is, December is relevant to 2007, and January, February basically is for 2008, but this December relevant to 2007. So that means the cost for the December, expense for the December for electricity, we have to bring it back for this year. So let's calculate how much is the total. 168 divide 3. So how much is the per month here? So we said 168 divide 3. That gives me 56 per month. So that means within this amount, that is 96 plus 120 plus 104 plus 145 plus we need to bring this 56, because this 56 relevant to this year 2007, even though the invoice is received on next year February 2008, but expense I have to bring it back. I have to bring it back, the expense, because this expense is relevant to this year, and this is called accrual concept. So obviously how much will be the cost here? So if the question asks you calculate the electricity expense for the year end 31st of December 2007. So that means we have to add all of this. We have to add all of this and bring it back 56 for 2007. So let's add all of this. 96 plus 120 plus 104 plus 145 plus 56. That gives you 521. So 521. This amount is basically the electricity expense. So accrued expense is here 56. The expense is accrued. Accrued means I already used the electricity, but I didn't make the payment for this year. So obviously inside of the 521, 56 I have that I didn't pay it on this year, I paid on next year. But as the expense is relevant to that year, I have to bring it back for 2007. The next one is asking calculate the accrued expense at the year end. For the year end, my accrued expense is 56. So basically, my year end expense is 56. That's it basically, the accrued expense. This is the way you can calculate that. Let's have a look. Is there anything else they ask? Yeah, we have a number C as well. Let's talk about number C. On number C, they're asking how to record in the financial statement. This is one of the important area, and sometimes students get confused on this area. So how to record this on the financial statement. Now the accrued expense, remember that accrued expense always increase the expense, and of course it will create a liability. The reason it will create a liability because we didn't make the payment on that year. So let's have a look what is here. Number C is asking, show how the above transaction would be recorded in the ledger account. For the electricity expense and the accrued expense account, show clearly the balance to be carried down or transferred to the statement of profit and loss account as appropriate. So balance carried down means balance CD, we already know it. And SPL is statement of profit and loss account. Bank is the asset, so statement of financial position. Accrued expense is also the item of statement of financial position. Now we have to be very, very careful. One thing, remember, electricity expense is the expense during the year, and the SPL account that is will move to profit and loss account. And remember, for SPL account, there will be no balance CD and BD. There will be no balance CD and BD for the profit and loss account. For the profit and loss account, whatever we charge for that particular year, we charge the expense for the whole year. For example, if this year I have 2007, how much is the profit and loss account? How much is the electricity bill we're going to charge for the profit and loss account? We're going to charge in this year, and there will be no balance. So this expense account will be never carried forward or brought forward to the next year. So from the profit and loss account, we never forward any balance to the balance sheet except the profit or loss. So anything we have like rent and rates, all the bills, expenses, that is only for 1 year. So there is no balance CD for that. All right, so let's have a look. From here, what happened? For the electricity expense, obviously we have paid some electricity bill during the year, and after that some electricity bill was accrued. So we have to record this one here, and how we record, we're going to see that. The next one, from the bank, we're going to see how much money you have paid from the bank, and actually how much money is still accrued, we're going to see from the accrued expense account. So let's have a look at that. So let's move on to our electricity expense account. So on the electricity expense account, the first thing we can see how much we paid from our bank. So from the bank, we paid 96. This money is already paid. Then from the bank, we paid 120. From the bank, we paid 104. And from the bank, we paid 145. 145. And finally, we have £56 expense that we didn't pay from the bank, that is accrued. So accrued expense, and that is £56. So this one is total, that gives me the expense of 521. And this all expenses we charge to profit and loss account. So we said P&L account, that is 521. We never write balance CD here. Remember that. For the SPL account, we never write balance CD. Now, how we record all of this? If you want to see the journal, so I can say the journal is Electricity expense debit 96, bank credit 96. So every time we make the payment for the electricity bill, we do the journal. Maybe the next one we can say again the same thing. Number 2, electricity expense debit 120 and bank credit 120. And that's how we'll do for 104, 145. The last one we have accrued expense. This one, the journal will be electricity expense, electricity expense, that will be debit 56, and this time it will not be bank because we didn't make the payment from the bank yet. So we're going to say accrued expense credit 56. So that's how we'll do that. So that's how we move all this journal to the ledger account. On the bank, so of course the bank is credit because money goes from the bank. So on the credit side, we're going to write all of these electricity expense, electricity expense. The first one is 96, next one is 120, then electricity expense 104, and the last one is 145. We're not going to write the accrued one because accrued money never going to the bank, never going from the bank on that year. Finally, the last one we have, that is accrued expense. Now accrued expense always is a liability, so obviously like this one we will always record on our credit side because accrued expense is a credit. So on the credit side, I'm going to write electricity expense, and that is 56. And this one actually moved to the next period. So that will be our balance CD. That will be our balance CD 56. So whatever is the accrued for this year, that will be the balance CD, and this balance CD will be the balance BD for the next year. And of course, like that's how it will be moved to the next period. So in next period, what will happen? This 56 money, whatever we didn't pay it, we're going to pay next year. It's very, very important. You need to understand one thing. Even though it is a liability for this year, current year, but this liability will be paid in next year. So will be paid in next year because you didn't receive the invoice this year. So of course you're going to make the payment on next year. So if you make the payment on next year, what will happen? So this liability will be gone. So we need to reduce that time. That time we do the opposite journal. So we do accrued expense debit, and that time we'll say money will go from the bank, so bank will be credit. And of course, if there's a new more accrued expense, we need to record that. So for this question, all of this you need to understand. That's it. Let's move on to the next question and have a look what happened when this liability will be paid off. Let's move to the next one. This is called reversal of accrued expense. Reversal of accrued expense. What happened here? It's the reason for reversal of accrued expenses. Let's read this one quickly. It's at the beginning of the following period, there will be a balance BD in the accrued expense in the account. So at the beginning, obviously at the beginning of the period, there will be opening balance that will come from the next last year, that is 56. So when I open the account for the next year, I'm going to see 56 came from the last year because of the amount we didn't pay, the expense we just claimed, but we didn't make the payment. So there will be some accrued balance, opening balance. The balance that we have last year, that was 56, it will become down as opening balance the next year. This will be a credit balance as the accrued expense account is a liability account. Of course, it is a credit balance because it's a liability. If I don't make the payment, it's a liability. The related invoice will be paid during this next accounting period and therefore recorded in expense. So next accounting period, I will pay that liability that come from the previous period, and I will claim this one as expense. Obviously, the expense will be debit and the bank will be credit. However, the expense related to the prior year, therefore this expense need to be removed by reversing the balance BD on the accrued expense statement of financial account, and obviously the journal will be accrued expense debit and expense credit. So what I'm doing here, I'm making the accrued expense debit so that my liability will be finished, because before the accrued expense was credit, now I'm making it debit, so it will be cross each other, and the expense will be decreased because this expense is not relevant to this year. The expense was for the last year, so I have to make it down. So let's read one of the example. Let's do one of the example. Activity 3. In activity 3 it says reversal of accrued expense. Reversal of accrued expenses. What happened here? Following on act from activity 1. So from the activity 1, in the year ended 31st December 2008, Fiona paid the following electricity bill. So Fiona paid in the next year. So last time we done 2007, this time we're doing 2008. That means it's the next year. So we can see here, 12th of March, we paid £168. And inside of the £168, there was something that is £56 that was for the last year, 2007. But of course, the invoice come as a quarterly, so we paid in 2008. So all this expense, 168 is not relevant to 2008. All this expense inside of 168, 56 is basically for the last period. So I need to take it out, isn't it? The next one is like quarter to May, quarter to August, all this good. That's for 2008. During March 2009, so next year, March, Fiona received another electricity bill, 189 for the quarter to February, same story. So this year he received again some bill 189, that's relevant to the quarter, for 3 months till February. That means 3 months here. Again, February, January, and December last year. So 1 month is relevant to 2008 and another two 2009. So basically this one I have to bring it back for 2008, even though I didn't make the payment in 2008. The way we did the last year, we're going to do the same way. Okay, let's have a look. What is the requirement here? So the requirement here is let's do the electricity expense and the accrued expense. This is quite straightforward. Let's do this one. So electricity expense, how much you paid from the bank, we're going to record straight away all this money, 168, 134, 118, and 158. So we're going to record all of this. So let's write it down. We're going to write bank. From the bank, we paid 168. Then from the bank, we paid 134. From the bank, we paid 118. From the bank, we paid 158. And we have accrued expense for this year. How much is the amount? Let's have a look at that. The amount is 189 and 1 month belong to this year. So I'm gonna divide by, so I'm gonna say 189 divide 3. So that will give me 63. So 63 relevant to 2008. So you're going to say accrued expense, that is 63. I'm not going to write the bank because we didn't make the payment yet, because that will move to the next year the way we did the last one. So this is the story. So this is the one total expense for this year 2008 for the electricity, 641. Now if you remember the 56 that was paid in 2008, but that relevant to the last year, I have to minus this one. So I'm going to say accrued expense reversal, accrued expense reversal, reversal 56. So writing this side, that means actually I'm making the balance sheet lower. So how much I'm going to charge actually profit and loss account? So I'm going to say P&L account, I'm going to charge 585, not 641, not 641, because 56, whatever I paid even this year, that is inside of 168. This 56 belongs to last year, that is 2007. So I'm not going to charge an expense in 2008 that is relevant to 2007. So this 56 I already included last year, so I have to take away this one. Now if you have a look the accrued expense account, you see the 56 come from the last year, because the last year it was balance CD and this year it become balance BD. So if it is become balance BD, and obviously if it is balance BD, so we have to take away that. So we have to remove this 56, because in 2008 we already paid this amount. In 2008, we already paid this amount, and if we paid this amount, this is not the liability anymore. So I'm going to say here electricity expense. This money is paid in 2008. I'm going to say electricity expense 56. So 56 is already paid, but this year we have created new liability, that is 63. This one. So this expense I didn't pay this year, I have to pay next year. So for this year, it is a liability. So same way, the way we did last time, we'll do same thing. Electricity expense 63 is our liability. And obviously, if we added this one, that will be 119, 119, and that will be our balance sheet. 63, and this balance sheet will move to the next year as a balance BD, and we will do the same thing for the next year so that we can adjust. So you can see here in next year we claim all the expenses that we paid, whatever is accrued, and anything reversal that will relevant to next period, last period. So we minus that, whatever is the balance, actually this amount we charge to profit and loss account. And on the accrued expense account that is relevant to statement of financial position, that was the liability came from the last period 56, and the liability is gone this period because I make the payment this year. So 56 is gone, new liability created 63, and this will be carrying forward for the next year. This is our accrued expense reversal. So first thing is accrued expense, and the next year is a reversal. Reversal means whatever is the liability for this year, the liability will be not stay in the financial statement forever, isn't it? Because next year, as soon as I make the payment, the liability will be gone. So obviously, I have to do the reversal account. All right, so this is our reversal of accrual expense. Let's little bit talk about uh, accrued income. What is accrued income? Let's talk about this one. So accrued income, if little bit go down, hopefully you will see that. So accrued income, yeah, this is the accrued income. Accrued income, they said accrued income is income which has been earned during the accounting period but not invoiced or received. So basically, income has been earned, but the money is not received. For example, we have a year 2007, and we do some services in the last month, let's say December, and we already done the work, but we did not receive the money. For example, we are the pest control business, and we already provide a pest control services for a company. So we already finished the work. So finished work, but money did not receive until February next year. So even though we received £2,000 on next year February as a services, but this income relevant to 2007. Even though we didn't receive the money on 2007 by December, and we receive the money next year, even my financial year is end, but I need to bring this income back to this year because this income relevant to 2007, not 2008. This is called accrued income. So that means the income is already accrued, but did not received yet. So not invoiced or not received. What do we do with that? So if we have something like this, like we already earned the income, but we didn't receive the money yet. So the journal will be for that accrued income debit. So that will be your asset on the financial statement because you're going to receive some money because service is completed. So you're going to receive some money. So that will be like your sales ledger control. So the person going to pay you. So that is your asset. That will create the asset on the statement of financial position. On the other hand, that will increase your income. So income is a credit SPL account, a statement of profit and loss account, it will be credit, even though the money did not receive on that year, but this is still your income because the income is relevant to that period. Doesn't matter you receive the money or not, but income has to show on that period. So this period, for example, 2007 and 2008. For the income of 2007, if you receive the money 2008, so you need to still bring it back 2007. So obviously in 2007, when you receive the money here, let's say £2,000, that time you minus £2,000 and make it cross because that is not relevant to that period. but for the time being, you bring it here. Let's look at one of the example and try to understand more. Let's move to the activity. Let's have a look on of the activity. Let's say activity 7. On activity 7, we can see it says a business has a year end 31st of December 2001. So business year ending is 31st December 2001. Okay. A client has paid commission income of 17,000. So client paid commission income 17,000. A further 4,000 is due. So 4,000 is still due. Already client paid 17,000 and 4,000 is due. However, a bill has not yet been sent out for this amount or not recorded in the accounting records. So this 4,000 bill I didn't send to the customer yet, or I didn't record in the financial statement. So this one I already received on the bank account, and this one I didn't send the bill, but this income is already earned. That means this income belongs to this year, 31st December 2001. Calculate the income. Calculate the income in respect of the commission for the year end 31st December 2001. So we need to say 17,000 I already received. And even though the 4,000 I did not receive, but this 4,000 relevant to this year 2001. So my total income for 2001 is 21,000. Doesn't matter, I received only 17,000. This is called accrual concept or matching concepts. We have to match the income against the expense to the particular year. State the amount of accrued income due at the year end. So at the year end, how much income is still due? That is 4,000. So we didn't receive the 4,000. So this one will be our accrued income. So for the year end 31st December 2001, we're going to pay tax on 21,000 income, not 17,000. You cannot say like, oh, I did receive only 17,000 pound from the customer, so I'm going to pay only tax on 17,000. It's not going to work because you have to see how much money you earned during that period. Doesn't matter you received any cash or not at all. All right. So what happened on the next year? Basically, this person paid you. So this income you already showed 2007, 2001. So in 2002, when you actually received this 4,000 pound and 4,000 pound, so this 4,000 pound is not belongs to 2002. So for 2002, we have to minus this 4,000 as income. So from the 2002 total income, you're going to minus this 4,000 because this 4,000 you already treated in 2001. That is called reversal. Let's have a look on of the example for the reversal. Reversal of accrued income. Let's have a look at reversal of accrued income. In reversal of accrued income, is a reason for reversal of accrued income. As with accrued and prepaid expense, the balance BD on the accrued income statement of financial position account must be reversed at the start of the following year. So we need to reverse it at the start of the following year. All right, how we reversed it? Now I need to make my income down because I already showed this income last year. Income account statement of profit and loss account debit. So if I make a debit, it will go down because normally the income account is credit. So if I make a debit, that means it will be reduced. And accrued income, I'll make it credit. So before I said it was asset, now I'm going to remove the asset because that's not my asset anymore because the money is already received from the customer. Let's have a look one of the example, how we do the reversal. Reversal of accrued income. Following from activity 7. So following the last activity, activity 7. In the year 31st December 2002, that is next year, 31st December 2002, next year, the business received commission income from the client 23,000. So we received total 23,000. And inside of the 23,000, we have 4,000, isn't it? This amount includes 4,000 owing from the last year. Yes, you can see that. On 10 February 2003, the business received 7,200 commission from the client for the 3 month ended 31st January 2003. So my year is ended 31st of December 2002. And we can see on February next year, we receive 7,200 commission. That is relevant to 3 months. That means that is relevant to year ended 31st of January 2003. Okay, so that is relevant to 3 months. On 10th of February 2003, the business received commission for the client 3 months. So 3 months ended January. So if it is ended on January, that means January, December, and November, isn't it? 3 months. So November and December that belongs to 2002, and January belongs to 2003. That means this one will be not considered, and this one basically will be considered, even though we received the money on next year, February, but that's 2 month belongs to 2002 because 2002 year ending is 31st of December. So November and December I have to bring for 2002. I'll leave 1 month, that is January, that belongs to the next year, 2003. Okay, so let's calculate this one, 7,200, and divide by 3 times by 2. How much is here? 7,200 divide 3 times 2. So 2 months is 4,800. This 4,800 income relevant to 2002, not 2003, even though we received the money in 2003. Okay, so the commission income, let's have a look. On the commission income, the first thing we can see on the bank, we received 23,000. So we said on the bank, we have received 23,000. And on the 23,000, 4,000 is from the last period. So I have to say reversal of income. So accrued income reversal 4,000. Writing on this side, that means I'm reducing the amount because at the end I'm going to do the balance sheet. So of course, like I'm going to charge to the profit and loss account. So obviously that will give me the balance anyway. And for this year, we have some accrued income that is 4,800. From 7,200, 4,800 relevant to this period. So how much is the total accrued income? If I added this two, that gives me 27,800, 27,800. And if I minus 4,000, because that was relevant to the last period, so I'm going to charge profit and loss account for 2002, 31st December. That will be 23,800. This one actually go to the profit and loss account for this year. On the accrued income, we can see 4,000 come from the last period, and this 4,000 is already received this year. So this has to be gone. So I'm going to write commission income, that is 4,000. So writing this side, both sides, that means 0 is gone. And obviously for this year, I have some accrued commission income. So I'm going to write commission income accrued, or accrued commission income, whatever you write. So commission income accrued is a debit. So on the debit side, I'm going to write commission income. How much it is? 4,800. And this one will be moved to the next balance. If I added this to 8,800, 8,800, and my balance CD will be 4,800. And that will be moved to the next period as the opening balance, like here, and we do the same story. So what happening? The current year, whatever is the liability or whatever is asset, because the next year it will be sorted, and next year we reverse it. Reverse means the one we showed already last year, we cannot carry it forward forever. So next year when we receive the money from the customer or we paid, this has to be sorted. This has to be vanished. We do the opposite journal. Okay, so this is all about the accrued expenses and the accrual income. Now we can talk about a little bit accrued the prepayment. The prepayment, we have the same thing. We have a prepayment for the income and we have a prepayment for the expenses. Let's try to find something for our prepayment. All right, so let's talk about the prepaid expense. Now the prepaid expense happened when we paid in advance. So when the person or the company paid in advance, we called it prepaid expense. For example, your car insurance, you pay the car insurance in advance. So for example, you paid in January, you paid your car insurance in January for the year, so 12 months or up to next year, December. So basically, when you pay in advance, we called it prepaid expense. Prepaid expense Prepaid expense is an asset. Is an asset. If you paid in advance, this is the asset for you. So what happened in financial statement? If you paid in advance, then your expense for that year will be reduced. For example, let's say we are in 2007 and we have paid in November, we paid um £6,000 for 6 months. So our year is ending January till December, but we paid here for 6 months. So even though we paid £6,000 in 2007, but inside of the £6,000, some of the expense we paid for the next year, because that's for the 6 month. And here from November and December, we have only 2 months. So another 4 months we paid prepaid. So we paid in advance. So 4 month payment we make for the advance. So 4 month it will be like 4,000. So 4,000 is a prepaid or prepayment expense. So what will happen on the financial statement? Let's say if my total expense for that year is £20,000, from this 20,000 I'm going to minus this 4,000 as a prepaid expense, because this expense, even though I paid this year, but it's relevant to the next year. So my actual expense will be 16,000, not 20. Let's have a look one of the example here and try to understand prepaid expenses. On the prepaid expenses, we can see, say the following on from activity 1, Fiona also made the following rent payment in year 2, 31st December 2007. So he paid the following rent payment. So for year ending December, that means the year start from January till December. That's the year. So he paid on 1st of February 375, and 6th of April he paid 1584. So 1st of February 2007 he paid 375 for how many months? 3 months till March. That means January, February, and March. That is absolutely fine because January, February, March all are 2007. There is no problem for that because this expense relevant to 2007. But what happened on 6th of April 2007, he paid £1,584, that's for 12 months, and up to 31st of March 2008. That means up to next year. Up to next year. Now, if he paid up to next year, what happened here? Because my year is from January to December. January to December. So obviously, I can take this 375 that is relevant to up to March. And this one here, 1585, I paid on April 1585, 84, but that is for 12 months. So here from April to December, I have only 9 months. So I can take here from 9 months only. So divide by 12 times 9. And another 3 months will be advance, that will be prepayment. So 1584. So divide 12 times 9. So that will gives me 1584 divide 12 times 9. That is 1188. That will come here 1188. That's relevant to 2007. And minus 1584 or 3 months, that is 396. 396 is the advance, that's for 3 months. So 3 months basically is the advance, that is 396, because my year is ending on December, but I paid up to March 2008, up to next year March. So obviously after December, whatever I paid in advance. So £396 I paid in advance. Okay. Let's have a look what is the requirement here. The requirement here is calculate the expense incurred by the Fiona for the rent for the year ended 31st December 2007. So you already know that. Obviously 375 is relevant for this year and 1188. So 375 plus 1188, that is 1563. 1563. That is basically actual expense for this year. Even though I paid little bit more, I paid 375 and 1584 for this year, but 3 months I paid in advance for the next year. Calculate the prepaid expense. How much we paid in advance? 396, 3 months, isn't it? 3 months we paid in advance. All right, so let's move to the next question. Let's move the ledger account. How are we going to record in the financial statement? On the rent expense, we're going to say from the bank, we paid 375, then we paid again 1584, and we have some prepayment. So prepaid expense, that is 396, and actually we're going to charge to profit and loss account. That will be the total of that 1959, and the balance CD or profit and loss account will be 1563. This is the one we're going to charge to profit and loss account as a rent expense. Even though we paid this amount from the bank, but still this amount is not relevant to this year because some of the money we paid in advance and we have to reduce it. So you can see from 1959 pound, we minus 396. So basically that gives me the figure 1563, and that is relevant to this year financial statement, this year profit and loss account. From the bank, of course, the bank is a credit because money going from the bank. So from the bank, I just write how much I paid from the bank. So 375 I paid from the bank, and 1584 I paid from the bank. On the prepaid expense, how much is the prepaid expense? Prepaid expense is always asset. So obviously on the debit side, asset is a debit. I'm going to write rent expense. So I paid some rent in advance. So I'm going to say how much you paid, 396, and that will be my balance CD, because this balance will move to the next period. Whatever is the asset until I receive the services, and next year that will be my asset because I paid in advance. So that my 396 and 396. That's it. So we can see the rent expense total is basically 1563. So how much we total paid and how much is the prepaid? The difference is the expense. Bank, how much you paid from the bank, and prepaid, actually how much you paid in advance. All right, so let's move on to the reversal. Reversal is what happened in next year when obviously like actually this money will be adjusted. So 396, next year I'll get the services for the rent, and obviously this will not be my asset anymore, and that need to be adjusted. So let's have a look the next example, how we reverse these prepaid expenses. So let's move on and find an example. All right, so let's have a look this example, reversal of prepaid expense. So this one, what happened when the next year you actually use the services, and this prepayment is no more prepayment. So when I said the last year 2007, it was our asset, it was our asset because we paid in advance. But when I'm in 2008, obviously like I'm using the rent services, and this is not my asset anymore. So last year I was decrease my expenses. I said that expenses is not relevant to this year, so I decrease it, and I increase my asset because I said I make something in advance. That's the prepayment. But this year I'll do opposite. I'll increase my expense, so my expense will be increased because this expense relevant to this year, and my asset will be decreased because that is not my asset anymore. So on the reversal, that is happened. Reversal means whatever was the asset for the last year, this is not asset anymore because last year I said I paid in advance, but this year actually this is gone. And last year I said this expense is not belongs to 2007 because I paid in advance, so I was decreasing my expenses. But this year I'm going to increase my expenses. Let's have a look. Let's read this question. It says, following from the activity 4, Fiona made the following rent payment in the year 31st December 2008. Okay, so he paid this year 1680. That's again for 12 months and up to March 2009. Our year is ending. Our year is ending 31st December. December is the cut-off period, and he paid after 3 months extra, January, February, March. So obviously we cannot take all of this because inside of the 1680, 3 month is a prepayment. Okay, so let's have a look what else we have. Let's look at the rent expense account. So that's it from the activity 4. So of course, like we have to think about the last year prepaid. So last year the prepayment was 396, if you remember that. So prepayment expense, that was 396 for the last year. But this year, obviously, we need to consider this year. We have to say how much is a total. So from the bank, we paid 1680. So we said from the bank this year we paid 1680. So total expense for the rent for this year is 2076. 396 plus 1680. But the question is inside of the 1680, 3 months is for the prepayment. So I have to minus the three prepayments. So I'm going to say prepayment, that is how much? 1680 divide by 12 times by 3. 1680 divided by 12 times by 3, that is 420. So 420, that is our prepayment. So how much actually going to charge to the profit and loss account? It's 2076 minus 420. So on the P&L account, we're going to charge 1656. This is the money we're going to charge actually to the profit and loss account. So this expense come from the last period because last time we paid in advance, and this one we paid this year from the bank. But inside of this 1680, 3 month is for the prepayment. So I have to write in this side, that means it's minus. And the profit and loss account I'm actually charging for the rent expense is 1656. For the prepaid expense account for the statement of financial position, my opening balance was 396. That's come from the last year. And obviously, I'm going to write rent expense because this expense is relevant to this period. So it's now vanished, it's gone. So opening balance that's come from the last year, and this year this is adjusted because this expense relevant to 2008. So that is now adjusted. But this year also I have some prepayment, that is 420. So I'm going to write rent expense, that is 420. And if I added all of this, 816, 816, and the balance CD is 420. And this 420 exactly the same way it will be moved to the next period. And that's how we'll keep doing this. So whatever is relevant to that period, you only consider that. Doesn't matter it is income or expense, prepayment, or it is a prepayment expense, prepayment income, anything. So that we need to identify, is that relevant to this period, the period we are doing? If it is not, not. If it is, it is. But we never consider did we receive the money or we paid the money. Doesn't matter. Received or we paid doesn't matter. All right, so this is our prepaid expense. Let's have a look one of the prepaid income. So if we see one of the prepaid income example, so we'll be hopefully done with the accruals and prepayment. So let's have a look if we can find one of our prepaid income example. All right, so we have found an example for our prepaid income. So let's have a look at this one. Now, prepaid income is quite interesting, obviously, like the prepaid expense. Prepaid income happened when you didn't provide the services, but you received the money in advance. So, for example, sometimes when you do the job as a contractor or for the construction, they will pay you some money in advance. For example, if you want to build a house or if you want to build a road, they will give you some money in advance so that you can keep working and you can support yourself. So obviously this type of income, what is advance income, that is not relevant to that period. So if you receive an money that is not relevant to that period, but they give you an advance, but you didn't give the services yet, that is prepaid income. Let's have a look at this example, prepaid income. Here it says a business has a year end 31st of March 2003. So year is ended 31st of March 2003, 31st of March 2003. Okay. It earns income for from providing the maintenance services. So you provide the maintenance services, you receive the income. The cash book for the year end shows receipt for the maintenance service income of 52,965. This includes the following received. So at the year end, you receive 52,965. That's your cash book is saying. This is the money total received. Now, before you say this is all your income for this year, for 2003, 31st March, we need to see is there any income prepaid? Because if they paid me in advance, this income is not relevant to 2003. That may be relevant to the next year. So we need to take away any amount that is not relevant to this year. So let's have a look at this one. The first one we can see maintenance service. So 1st January 2003 to 31st December 2003, 1023. This money we received, and that is relevant to from 1st January 2003 to 31st December. And our year is ending March. So January till March, only 3 months is relevant to this year. Other money April from April 2003 till December 2003, this money you have received in advance, isn't it? Because from January to December is 12 month, and our year is ending on March. So January, February, March. So on March our year is ending. So after March, anything relevant that is not relevant to this period, that will be as a prepaid income. So from 1032, only relevant is 3 months. So another 9 months will be prepayment. So divide by 12 times by 9, that will be 774. This 774 is a prepayment. And the next one is saying 1st April 2003 till 31st of March. That is completely prepayment, isn't it? April starts after my year is end. My year is ending 31st of March 2003. This one is start from 1st of April. That means that is completely prepayment. So this one is for the next period, not for this period. So even though I'm receiving £52,000, 52,965, but 774 is prepayment that for the next year, and 810 also for the next year. So for my this year actual income is how much? That is 52,965 minus 774 minus 810. That is 51,381. This is my income for 31st of March 2003. And other income we have inside of this amount, that is basically the prepayment. So maintenance income I'm going to say for this year, that will be 51,381. And calculate the prepaid income. How much is the prepaid? So we have prepaid, that is 774, and we have 810, isn't it? So 774, 810. So 774 plus 810, that is 1584. 1580. That's my prepayment. So the prepayment means I didn't give the services yet. I didn't provide the services, but I already took the money in advance. So if I took the money in advance, so this income is not relevant to my current year. So I'm not going to pay tax on this income for this year. I'm going to pay tax on next year. I'm going to show this is my income next year because that's my prepayment. Any prepayment I took in advance, I don't show as income. It will reduce my income because that's not my income at all, because this income will be relevant to the next period, next year, not this year. So this all we try to explain a little bit about the accruals and prepayment. I hope all of you have some understanding now. Now, of course, like if you do more practice, if you do a little bit more exercise, it will be clear. But I hope you have some now understanding how the accruals and prepayment work. If you do the same thing few times, you will be absolutely fine. But this one of the tricky area, as I said, not only for your exam purpose, but also for your working and for the interview. If you go for interview in any job, they will ask you about this accruals and prepayment, because this is the toughest area. This is the tricky area for the bookkeeping. But it's not difficult. If you do a little bit practice, you'll be absolutely fine. Thank you very much for watching. Hopefully, you have some idea about the accruals and prepayment now.